Hello students, welcome to my channel KT's Commerce Classes. Today's subject accountancy, chapter name consignment part 30. Question given, the account sales from agent showed sales were made for rupees 4,50,000 out of which rupees 3,12,500 made at invoice price which is 25% above cost and the balance at 10% above invoice price. His expenses was rupees 5,000 in bracket including 1,800 for selling. Consignor incurred rupees 2,400 as expenses. Agent remitted the balance amount by a side draft after deduction of 5% commission, bad debt rupees 850 and bill payable accepted by him for rupees 20,000. Unsold stock at cost is rupees 50,000. Prepare consignment account and consignee account in the consignor's book. At first, we have to find out the loading. Here, question given, invoice price which is 25% above cost. So, cost when 100, profit 25, invoice price 125. The loading equals to profit by invoice price equals to 25 by 125 equals to 1 by 5. Question told, total sale is how much? 4,50,000 out of which 3,12,500 made at invoice price. Now calculation of invoice price of good consigned, invoice price of sale of rupees 3,12,500 that is equals to 3,12,500. Invoice price of the remaining goods. Remaining goods is how much? 4,50,000 minus 3,12,500 that is the remaining goods. It is sold at 10% above invoice price. So invoice price here we consider 100, profit 10, so selling price 110. So we have to, this is what selling price given. So we have to convert it to invoice price. So divided by 110 into 100 equals to rupees 1,25,000. Total rupees 4,37,500. Now we have to find out the cost price of the goods sold. Cost price of the goods sold equals to 4,37,500. This is invoice price. We know invoice price equals to 125. So divided by 125 into 100, that is cost price equals to rupees 3,50,000 plus cost price of unsold stock given in question 50,000. So cost price of the goods sent or consigned, that is 4 lakh. Therefore invoice price of good consigned equals to 4 lakh divided by 100, that is cost price into 125 equals to rupees 5 lakh. Now valuation of unsold stock, invoice value of goods equals to 50,000, that is cost price divided by 100 into 125. We converted into invoice price equals to 62,500. Plus expenses of consignor 2,400 divided by 5 lakh. This is total value of invoice, total value of good consigned at invoice price into 62,500 equals to 300. Plus expenses of consignee, that is which expenses we have to consider? Non-recurring expenses. Here recurring expenses is 1,800, so non-recurring expenses, that is 3,200 divided by 5 lakh, that is the total invoice value of good consigned into 62,500 equals to 400. So total will be 63,200. That is valuation of unsold stock. Stock reserve will be 62,500 into 1 by 5, that is 12,500. In the books of consignor, now we have to prepare consignment account and consignee account. Now when goods is consigned at invoice price, accounting entry will be consignment account debit to goods sent on consignment account. So in consignment account to goods sent on consignment account, that is 5 lakh. For cancellation of load, accounting entry will be goods sent on consignment account to consignment. In consignment account by goods sent on consignment account on 5 lakh, 1/5 loading equals to loading will be 1 lakh. Expenses of consignor accounting entry will be consignment to bank. Expenses, that is 2,400 in consignment account to bank. Expenses of consignee, so entry will be consignment to consignee. Recurring equals to 1,800. Non-recurring, that is 3,200. So entry will be consignment account to consignee. So in consignment account to consignee, total expenses that is 5,000. In consignee account by consignment it will be 5,000. For commission, before commission for sale proceeds accounting entry will be consignee to consignment. So in consignment account by consignee sale proceeds that is 4,50,000. On 4,50,000 commission, how much percent given? 5% commission. Accounting entry will be consignment to consignee. So in consignment account to consignee commission narration that will be 22,500. For bad debt accounting entry will be consignment account debit to consignee. In consignment account to consignee bad debt 850. For unsold stock accounting entry will be consignment stock to consignment. So in consignment account by consignment stock 63,200. Before that consignment to consignee commission that also will be transferred to consignee account. By consignment it will be commission 22,500. For bad debt consignment to consignee. In consignee account by consignment by bad debt 850. Now you have to cancel the load on unsold stock. For this accounting entry will be consignment account debit to stock reserve account. That is in consignment account to stock reserve 12,500. Now we have to close the consignment account. Consignment account credit side balance equals to 6,13,200. That is written in the debit side same amount 6,13,200. Balancing will be transferred to PL account, profit transferred 69,950. Now in consignee account one advance has been given by consignee or that is bill accepted by consignee. So in consignee account it will be by bill receivable advance 20,000. Now debit side total that is 4,50,000. That will be written in the credit side. Balancing will be by bank 4,11,650.